and you're really going to enjoy today's presentation. Um, so, uh, you know, if you're not a member of the Alliance, please do join. We've got some really exciting things happening in the next few days. I can now announce we're going to be launching a new website. So the online uh, portion of it will be much more robust. Thank you very much to Monty Gearhart, who's on the call here. He has been doing all of that work for us. So with that, the membership is going to slightly alter. There's still going to be the ability to join gratis, but we'll have different tiers with different offerings for each of you. And I think that you'll find that there's a lot of stuff that we can help you with in the future. A couple things that are coming up in the not too distant future. Now that we're in the post-COVID world, or at least getting there, we can start thinking about the future. We've got a golf tournament coming up here in the I'd say Q3 in Southern California, and then we'll have in 2022, about a year from now, actually, at the end of May, we're going to have our Keeping the Promise event, which is a big kind of a gala and business to business type of event where the small business and service disabled veteran-owned small businesses get to interact with some of the primes and some of the agencies, federal government agencies that are out there. In addition, in the next month, we are having our board of directors election. So please feel free, check out the website. We'll have information on that in the coming weeks or so. And so right now, I just want to go through a little bit of the flow of this. If you could, they're going to be giving their presentation. Casey and Carrie are going to be giving their presentation here momentarily. Hold all questions to the end. I don't think you're going to have an option not to, frankly. But then we'll start a Q&A session. And if you could raise your hands or do whatever it is here on the screen to let somebody know that we can you have a question for us, and we'll be glad to answer all those. And they're great at answering them, by the way. In addition, I'll be putting up polls throughout just to kind of get a feel of who the audience is. I really appreciate it if you answer. If not, if you don't want to give the information, just click it and get it out of the way. But it helps us provide feedback and to some of the folks that we work with, the larger primes and the government agencies. Hey, this is who's here and this is where they're from. And it also helps us provide better focused efforts for these programs in the future. So that's what that's all about. And with that, what I'd like to do is introduce Casey Adams of Archimedes CNC. To be honest, we have been working with them and they have done wonders for our organization. And so I wanted to kind of bring them into the fold and talk to you, because the stuff that they provide is really incredibly helpful for all small businesses, of which USVBA is one. So with that, Casey, I'll let you take it from here, ma'am.
Well, thank you so much, Dan, for that lovely introduction. I'm feeling the pressure. Yeah, so my name's Casey Adams, and Carrie, if you want to advance the slide, Carrie is here with me, and we're co-founders of Archimedes CNC. C for Casey, C for Carrie, and you can decide which one comes first. And we've been champions of small business, both individually and together for a while now. And we came together as Archimedes to really lift up the small business community. And the way that we do that is by providing back office support and consultation. I was trying to think of the best way to describe what it is we do. And I keep coming back to almost mafia movies or something where we're the fixer. You don't know who to turn to get your problem taken care of. Come to us, we'll figure it out. And through doing that, we have built a number of fantastic relationships within different industries and different service providers. And that is really what drove the kind of creation of this particular workshop, because we're able to interact with a bunch of different folks and find out what mistakes either they've made themselves or what mistakes they're seeing other people make on a regular basis. And our hope is that after this presentation, you can avoid some of that heartache, or at least know where you can turn to get your questions answered. Carrie and I, we want to be there for you, and I put our website in the chat, but you can also, we will give you lots of ways of getting a hold of us at the end of the presentation. And just really consider us your resource for all questions, business. We'll even throw in some life advice too. So let's talk a little bit about the presentation. When you leave this workshop, you are hopefully going to know that the kind of the 5 big takeaways. You're going to understand how to pay yourself as a business owner. This is something that Carrie and I come across, I would say at least weekly, where people just don't understand the legal way to pay themselves. You're going to understand how to leverage credit to grow your business, because not all debt is bad. You're going to understand how and when to offer employee benefits. And let me tell you, it's a lot earlier than you may think. You're going to understand how and when to offer the best retirement benefits for your employees. And I've personally been dealing with aging parent issues this past month, and it has really brought home how important retirement savings are, both for yourself as the business owner, but also for your employees. And then all of this is kind of coming together to help you understand how and when to scale, if that's something that fits your dream. So a few ground rules, and Dan covered most of these already, but how to ask questions. This is an incredibly rich topic, and in order to kind of get through all of it, we're not going to be able to stop and answer questions as we go. So if you have a question, you can save it. We're going to have a Q&A session at the end of the presentation, or you can just type it into the chat. If you're like me and you're afraid you're going to forget what you're going to say, just put it in the chat and we will answer it at the end. And anything that we don't get to, we will make sure to gather in an email and email those questions and with their answers out. We're going to be sending the slide. And as you all probably saw pop up, this presentation is being recorded, so you'll be able to watch it again and again if you want to. And we will be sending out a copy of the PowerPoint as well. One other thing we're going to send out is a survey. Carrie and I believe deeply in continuous improvement. So we want to know honestly how we did today and what else we can help you with. Is there something you'd like us to go in a little more depth with? And if you'd like us to reach out for a more specific one-on-one consultation, we'd be happy to do that as well. And for everyone who submits that questionnaire, I'm just putting it out there, there's going to be a special prize that you'll be entered to win. So let's go ahead and get started. I'm going to turn it over to my friend and colleague, Carrie, and she's going to talk about how do you pay yourself as a business owner, and how do you know what your business is worth?
Thanks, Casey, and welcome everybody. And again, our incredible thanks to both Dan and Monty and the entire USVBA leadership team, who have been just incredible partners in our shared commitment to make USVBA just as strong as it possibly can be. And on behalf of our communities, that's our commitment to all of our customers. It is not an uncommon question for one of our clients to ask, can I just write myself a check? Because I need some cash. And often Casey and I have the opportunity to help enlighten and provide options, as well as risk assessment from the different options that are available to business owners. So we're going to start this discussion by first talking about how much is your business worth? Because in order for you to make the best decision on how to pay yourself, we have to talk a little bit about what your business is worth. In general, there are multiple factors, I think all of you know, that affect your business's reputation and whether or not you have new customers coming to you, and fundamentally start helping you to put together a picture, a full company picture on the value of your company. And specifically, we talk about profit. It's really easy, right? We look at our profit and loss statement, we look at the bottom line and we say, yay, we did it this month or this quarter or this year. But profit is only a part of the picture because it doesn't take into account the promises that we've made or the obligations we're under to fulfill payments in the future. So we then bring in that whole balance sheet that helps us tell part of that story. And we think, okay, between the two of these, we must have everything we need to know. And then we realize, wait a minute, just because I've balanced my assets and my liabilities, I've made a profit, doesn't mean I have all the cash in the world to spend. And a common misunderstanding is, I don't understand why I have cash in the bank, but you're telling me I have no cash to spend. And we love to have these conversations. But in the conversation, in the topic directly focused on paying yourself as a business owner, we really want to look at owner's equity. And owner's equity is the key function that tells us what we're working with in determining what options are available to us. So owner's equity is basically the amount of cash that would remain if you needed to close up shop today and you received all of the promised revenue that you were owed by your customers, and you paid out all your committed obligations to your employees, the IRS, and all of the suppliers that, of course, are knocking on your door. And the important thing here is that owner's equity is reflected on your balance sheet. So all of you should be able to look at the lower half of your balance sheet, and you will see under the liabilities section that normally it'll say liabilities and shareholder equity. Shareholder equity and owner equity are equivalent. You figure out your owner equity by subtracting your assets and liabilities. And this is kind of a backwards way of thinking because, again, the balance sheet, we need our assets and liabilities to offset each other. But when we look at that, it's liabilities and owner equity are equal to assets. So this is important because the next step in this journey is to understand what those assets are. And for most of you, this will probably be a fairly high level review, but I wanted to touch on a few things in each of these categories that help us to understand a little bit of how we can pay ourselves. I mentioned earlier, the cash in the bank is important, and certainly how much cash you have in the bank is an asset, whether it's committed to future payments or it is just pure revenue that you've realized in the operation of your business, but it is an asset. There's equipment in your facility, or perhaps the truck that you own or the car that you're driving are owned by your business. Those have value. The money that your customers owe you, I touched on that, has value to you. And one of the things that a lot of our customers are not as familiar with is where investments potentially in other businesses or as part of a protege mentor type relationship, where those investments actually are represented as assets. On the flip side of the coin, certainly your accounts payable are liabilities. You got to pay those off. You're obligated to do that contractually. If you have loans and you are paying interest on those loans, those are things that will come due the day that you decide, okay, I don't want to do this anymore. You may have accrued promises to pay. Examples of that would be payroll, because most companies are paying on a biweekly or a monthly pay process. The law requires that if you close up shop, you must pay your employees first, followed by the withholding taxes. And then in an order of priority that the federal government has established, you pay off all your obligations before you see a nickel. And hopefully none of you will ever experience that. But having been on the flip side of watching that happen, I understand that those priorities affect what owners are able to walk away with at the end of the day. And an often forgotten obligation are leases. A lot of folks have leases on vehicles or equipment, and they may not be familiar with the fine terms of the lease, but in some cases, they will hold you accountable for the full period of the lease, regardless of your financial situation. So all of these things are things that we talk about with our customers. This is the kinds of conversations we love to have. And we put this together into a little bit of a formula on figuring out, okay, let's talk about what the different options are. And part of that formula, once we understand a little bit about how much equity you have, is understanding a little bit about the timing, the timing that you are hoping to get paid, the type of business that you have, and your role within that business. With regard to timing, one of the things we always look at is how long has your business been in operation? And we compare and contrast that to what you're hoping to get out of your business on a periodic basis. Maybe you do want a regular cash flow, but perhaps you are okay with just having cash here and now. There are all sorts of different factors that may influence someone's timing as far as when they would like to get money out of their business. The type of business that you have is equally important. And this is, again, tied to whether or not you're a sole proprietor, an LLC, or a corporation. And Casey's going to go into a little bit more detail on these. And then finally, another key consideration is your role within the company. And that is whether or not you are actively involved day to day, or whether or not you are just a member of the board of directors, or you are an advisor. And these are all the types of questions that we engage in. So I'm going to turn it back over to Casey, and she's going to dig in on a couple of these to give you a little bit more of a perspective.
Yeah, so you understand what your company is worth. That's great. So many times people say to me, Casey, it's my business, so it's my money. I should be able to take it out whenever and however I want. And, I feel like, getting a milkshake today, so that's what I'm going to do on the company dime. And while, yes, you absolutely can do that, we're not going to tell you can't do anything. You just need to make sure you're aware of potential consequences to the decisions that you make. And our job is to help our clients, and really any business owner, really make an educated decision on what happens with their business. So let's say you're thinking about payroll. Well, in many cases, putting yourself on payroll is the best way to ensure you're receiving regular income. Being on payroll allows you to have a predictable cash flow, both for yourself as an individual and for your business. And that can be really important to some people. Money spent on payroll also has the benefit of lowering the taxable income of your business, which may be advantageous come tax time. The downside, and this is why a lot of people don't put themselves on payroll, is that your wages are subject to payroll tax. Now, payroll tax is something the IRS takes very seriously. And in fact, it's so important to the IRS that you need to make sure, if you're an owner employee of an S Corp or a C Corp, you really need to make sure that you're paying yourselves what they call a quote, reasonable wage. So what that means is what would you pay an employee, an unrelated employee off the street, for the same role and responsibilities? In the past, owners would try to skirt the payroll tax by just taking a distribution, or maybe just giving themselves $500 a month on payroll, even though they're working full time. And this can be a major red flag for the IRS. And while we know that I'm sure you don't have anything to hide, it's always good to avoid waving that flag at the IRS and asking them to come audit you. So it really is important, if you decide to put yourself on payroll, to really make sure you're complying with the labor laws and regulations, and to make sure that you're documenting your wages appropriately. And there really are a lot of hoops to jump through. But again, we're here for you. There are many other resources available to just really make sure that you're understanding what you're doing when you make that decision to go on payroll. Now, many of you may have heard about distributions. Sometimes they're called draws, depending on what type of entity you have. And that's another great way to pay non-employee owners, or owners of entities that don't allow owners to be on salary. Now, a distribution will not lower the taxable income of the business, but they're not subject to payroll taxes, which can be a big bonus for the owners. But again, it comes back to what we were saying, the IRS can get really prickly when it thinks you're doing tax evasion. So if you do decide to go the distribution route, just make sure that you have the documentation to back it up as the appropriate choice. And so many times the answer comes down to documentation. And that can be true when you're talking about HR issues, that can be true with bookkeeping. So many things is just document, document, document. And again, it's really important to understand your owner's equity and the overall business health, preferably by working with a bookkeeper or accountant before you take any money from your account, because just because the money is there at this point in time doesn't mean that it's real, or that it's there for the taking. So what are sort of the next steps? Because there are always steps. If you decide to put yourself on payroll, you need to really understand your business cash flow. You'll want to set yourself up as an employee. And so that means, do you have your I-9, you have a W-4, all the sorts of things that you might do for any other employee. You're going to want to set up accounts with the state and with the feds to allow yourself to pay all of those employment taxes. And one of the things that people often get tripped up by is filing your taxes is not the same as paying your taxes, and vice versa. So you might think, oh, good, I took care of the taxes. But if you just paid them and didn't file them, you can still get penalized. And the other thing to really know with these taxes is most states and the federal government are moving to online. And so you may need to set up a portal to pay your taxes. So for example, if you want to pay your federal taxes through EFTPS, well, there's a waiting period before you get your PIN number to do that. And if you've waited till the last minute, don't ask me how I know this, to set yourself up, you could find that you're paying late. You're going to want to take a look at payroll taxes and compliance. And then you're going to contract with a payroll provider or design and implement your own payroll system. So there's many things that you need to make sure you've done. I've got a checklist that I'd be happy to send out to anyone. Just let me know if it's something you'd like to look at. Now for distributions, again, understanding your owner's equity, reviewing your operating agreement or any sort of operating documents. Often it'll lay out how distributions are to be given. And this is really important if you're not just a sole owner. If you have a multi-member LLC, you're really going to want to make sure you understand how distributions can be taken. You're going to review your financial reports to make sure the money is there. And then again, document, document, document. So now you've paid yourself, you're doing great, but now you need to know how do you leverage debt to grow your business? And is debt a good thing? Carrie's going to explain that.
Like Casey mentioned, debt can work for you or work against you. And we're going to talk a little bit now about the strategies that we've seen and we recommend or don't for small businesses to consider when evaluating the use of debt for the benefit of growing their business. One of the key things to keep in mind is that debt is not a straightforward formulaic process that we say, okay, it's good to go into debt to buy something that costs $100,000, but it's not good to go into debt to buy something that only costs $500. Unfortunately, if it was just that black and white, Casey and I, well, I'm glad it's not, because Casey and I may not have as much demand for our time as we do when we're trying to help small business owners right now really make those decisions. And in our role as a reflection mirror, we often have our clients call us and say, hey, I'm thinking about this. I'm wondering what the impact would be if I chose to pay for it in this manner versus that manner. And essentially what debt is it's the trade-off between consuming more cash now or balancing or level loading your cash flow over a longer period of time. One of the key factors that influences the decision of using debt is with regard to capital equipment, specifically with regard to the effect of appreciation and depreciation. We were recently talking about the value of historic cars with a few of our closest contacts in our circle here, and come to find out that, in fact, cars that you may not think appreciate can possibly appreciate. Well, in the same manner, some of your capital equipment may equally appreciate because of changes in your industry. We're not going to have time today to go into the details of the effect of depreciation and appreciation on your financials. However, that is something that we talk about with our customers in order for us to make the best recommendation on how and if to use debt. So one of the key takeaways we want you to just keep in mind is debt offsets cash. That's just kind of a little acronym in our head. So there are a couple different types of debt instruments. I think most of us are familiar with business loans These are when we approach the bank and we're looking to set up or potentially advance growth in our business. We might approach the bank and get a direct loan, and the loan is, with the exception of a sole prop, the loan is made in the name of the business. There are a lot of reasons why you would want to do that, and typically business loans make sense when either if you're starting as a new business as an owner or a team of owners and you have a lot of cash to invest, banks will often use that cash, your owner equity, as collateral in helping to extend credit for you in the form of a formal loan. As a more mature business, they are much more interested in both your cash flow and your profit. And it's not unlike when you're being evaluated for a new home, or not so much a car or credit card, but certainly with a home, they look to see what your cash flow is to ensure that you don't overextend yourself in your mortgage payment. Same exact rules apply here. There is, of course, some finite uses of business debt, if you will. One of the most important capital investments a business owner or a team of owners might make is to invest in the purchase of their land or their facility, or a combination of that. And again, the rules for the purchase of equipment and the debt that's incurred as a result of that mimic the closest analogy are a home loan, for example, for a person. But again, this is typically only done in the name of the business when the business has substantial cash flow to be able to justify it. One recommendation we've made that I've witnessed pay off very well is where one of the individuals of the organization will lease the property or rent the property to the business. Be careful, because that has to be set up correctly in order for that to be fully up on the up and up with regard to your owner's agreement, as well as the type of lease agreement that you have. And that's a little bit out of topic, but I just wanted to let you know there's some salt and pepper associated with you leasing back to your business your facility or property. We talked a little bit about capital equipment, and both real estate and capital equipment are subject to appreciation and depreciation rules. And it's important that we talk about that balance, that if you're planning to buy a large piece of capital equipment to extend your business competency or capability, potentially you're going to be offering a new product, or you're going to be offering new software, services. This could be hardware as well as software and computers. And there are some variations to those on the depreciation schedule. So again, one of the nice things about equipment purchases is often if you are investing in large capital equipment, you can finance that directly through the manufacturer of the equipment itself. We've talked a lot about these more traditional types of loans, but often small businesses will secure a line of credit. The key thing about the line of credit is they can be costly, whereas the real estate and even an equipment purchase loan can have lower interest rates. Typically, your line of credit approaches a credit card rate. I've never seen them as high or higher than credit card rates, but again, it does depend on your ability to pay back and your historic credibility along that line. There is, of course, a credit card, and our rule of thumb is that you treat credit card like cash, meaning if you make that expense in that period, you pay that bill in full. Credit cards typically are covering anywhere, if you're really lucky, you might have as low as 12%, but even established businesses are paying sometimes 18 and 22% interest on carryover. We really encourage that you minimize the use of credit cards for any type of long-term type of leverage, and again, to treat them like cash. One thing that we have had the pleasure to help with on two folds. One is a business where a couple of the partners had decided they'd reached the point where they wanted to go fish and stay on the ocean longer than they wanted to be in the office. And we facilitated that process in helping to have the business buy back stock from the owners. And in that regard, the only rule of thumb there is we strongly advise, and of course, from an accountant's perspective, we are taught that you never borrow money to buy stock. It's always going to cost you more to buy the stock than the investment will ever pay back in terms of dividends or appreciation unless something is really working in your favor. But there are other reasons why it may be important to borrow in order to buy back the stock from your partners. And on the flip side, it might be time, you might be deciding that it's time for you to go fishing or sit on the beach and drink Mai Tais, in which case we're happy to help talk to you about some options on making that transition easy for your remaining partners and also for you. There's a lot of different options there. The process for applying for most typical loans, this is all the way through the credit card. It does not apply to a partner buyout. We would recommend that you consider that being handled contractually. But if you have to borrow money to make any acquisition, the process is very familiar, is that you're going to have an application that you need to fill out. You will need to provide business tax returns. And if you are an LLC or a sole prop, your personal tax returns. There are some S Corps, and depending on how the owner agreements are written, the S Corp owners may also have to provide personal tax returns. But normally, when applying for a business loan in the name of the business, with the exception already noted, they're going to want to see your business tax returns. They will also want to look at your profit and loss statement. That's to tell them that, yes, in fact, you are still in business and in making business. And as we've talked before, the balance sheet plays a heavy role in the determination of your credit worthiness. And then finally, they're going to look at some actual transactional effects, is what they like to call them. And an example would be and I'm going to bring up COVID. I know we're probably all a little COVID weary, but the PPP loan has really affected people's balance sheets. If it was properly recorded, you should be carrying as an obligation your PPP loan until the date that the SBA, the Small Business Administration, formally forgives that. Unfortunately, what we have found is that a lot of small businesses didn't realize that, and they recorded it as what they call miscellaneous income. And if that is done, that's made it really tough for some small businesses to be funded for some of their larger purchases. So we can talk to you about that as well. All right. We've talked about getting the money, but one thing that's often overlooked is, hey, how do I get out of this pickle? I don't want to borrow money. I don't want to have to leverage my company. Is there anything else I can be doing? And there's really, these are conversations that we have with our customers on a regular basis. We always talk about what other options we have. And we train in something called the best alternative to a negotiated value. And we try to look for non-monetary trade-offs that can be arranged. We also talk about lost opportunity cost, which is the fancy words used to say, how else could I be using my money? And as Casey has mentioned in our previous conversation, we also want to make sure you have the right people on your team to help you make these decisions. And I'm often asked, well, do I need a CPA for everything? And by all means, I think CPAs they have an incredible role when it comes down to the law and to contractual obligation. But you may be well suited to just have really close confidants that are sanity checkers for you. And we're happy to do that. And we're happy to help you work through who else should be on that team with you. So with that, I'm going to turn it back over to Casey, and she's going to run you through some pretty cool conversation on benefits.
Always helps to unmute yourself. Before I get into the benefits, I just want to touch on something Carrie mentioned, which is the having a team. And when I first got into business, I didn't realize that there were teammates available for me at no cost. And so I feel like this is something I really love sharing with people. Did you know that you should have a personal business banker that you can call up or email anytime with any questions, who will go to bat for you, who will educate you about credit and any sort of business banking questions you might have. And if you don't have that at your bank, find another bank, because this is what people do. There are business bankers whose sole job is to chat with you about questions you have about money. There are people that we're going to talk about here who will help you with health insurance. There will be people who will help you with retirement. And all of this, by and large, is at completely zero cost to you. There are people out there whose sole job is to help business owners. And if you're not taking advantage of their expertise, then you're not using your time as well as you could, because you got into business because you're really good at whatever it is you do. And there's no reason for us all to be experts in everything. So I really encourage everyone to find those resources and reach out to people for those kind of expert level help. But I'll get off my soapbox. So what about health insurance? Well, there are a couple of reasons people tend not to offer health insurance. One is they think they're too small, or they think that they can't afford it. Oh, go back. I'm not done yet, Carrie. They think they're too small, they think they can't afford it, or they simply don't know where to start. And this is where I say you're not alone. There are people whose jobs are to help you navigate this thing. One of the best moves you can make is finding a broker to be your partner. These folks live and breathe insurance and are here to help you make the best possible choice for your business. A good broker will not only shop around on your behalf, but will help you decide when to begin offering benefits, and they'll educate you along the way. So you don't have to understand the difference between co-insurance and deductible and premium, because they're there to help you, and they'll teach you as they go. And there are so many more options available than many people think. It's really not an all or nothing deal, and you may be able to offer something sooner, much sooner than you think. And again, the best part, a broker will cost you nothing. And we can help you find an ethical, experienced broker if you like, but in the meantime, let's cover some of the basics of offering health insurance benefits. So first of all, why offer benefits? Well, one is you want to retain and attract talent. Health insurance is really important. In some cases, people rank good health coverage as more important than paid time off or a good salary. So getting those people to come to work for you. And then once they're there, keeping them happy and healthy. Again, it's one of the top reasons that people rank satisfaction with their jobs. The other thing is just, bottom line, premiums are a tax deductible expense for your business. And anytime something's tax deductible, that's something that you want to jump on, right? Now, it's also, lowers your employees' taxable income, which is a benefit to them. And of course, most of the time, it's we want to do it because it's the right thing to do. Now, the reason I say most of the time is there are situations where your employees may be receiving, say, free state health care for a child or a disabled person in their home, something where they're getting a really inexpensive health insurance. And if you offer health insurance to them, you're thinking you're helping them out, but now it makes them ineligible for the free stuff. And this is something I had never considered until we actually ran into this, where I had an employee say, gosh, I really don't want to be eligible for this health insurance because it's going to, get me in trouble. I'm not going to be able to get the free state stuff. So really have that conversation with your employees and make sure that when you're trying to be helpful, you're actually helping. Next slide, please. All right, and like I said, it's not all or nothing. When I first started thinking about offering health insurance benefits, I thought, okay, I have to offer a platinum, Primera Blue Cross, covers everything. And gosh, I don't know if I can afford that. But really, there's many different stages between no health insurance and the platinum deal. So there's small group medical insurance, which is what most of us think of when we think of offering benefits. And that's simply a policy that you as the employer buy and offer to your eligible employees. And you get to decide how much you want to contribute towards the premium. Then there's a bunch of these kind of in-between spots. There's virtual care. So many people are getting comfortable with remote work and virtual meetings like we're doing today, that for a lot of the population, virtual care is a great fix. It's often extremely inexpensive. We're talking, $13, $15 sometimes an employee. And that can get them mental health coverage. It can help them with, They can't set a broken bone, obviously, over the internet, but dermatology, common ailments, sinus infections, prescriptions, no controlled substances, unfortunately, but for most people, virtual care can be a great halfway point. And then you've got something called health savings accounts and health reimbursement accounts. You may have heard HSA or HRA or QSERA. There's all these acronyms that they throw around. Health savings accounts are kind of what I used to participate in when I worked many, many years ago for a large employee. And that's where the employee puts in a little money every month that they can then use tax-free for health coverage. Health reimbursement accounts are different because it's employer owned. So with a health savings account, the employee leaves, they take that money with them. With a health reimbursement account, the employer gets to keep the money that they have set aside. They only have to pay out if an employee asks for reimbursement. And then it does have tax advantages for the employer. So you could say, will pay up to $100 a month for my employee for medical care. And if they use it, fantastic. If they don't use it, you still get to keep the money as the employer. And there are many platforms that will allow you to track these reimbursements in an easy way that won't add more to your kind of back office hassle, and you don't need to get into your employees' private lives. But there are just many, many wonderful things that you can offer often earlier than you think. So we talked about health benefits, but what about retirement benefits? Because that's sort of the other side of the coin when people are talking about benefits, unless they're talking about PTO. And retirement benefits are similar to health insurance benefits in that you're not alone. There are people who live and breathe these plans and can walk you through them. Something that a lot of people don't understand, though, is that you can shop around. They're not all the same. Just like with health insurance plans, when it comes to retirement benefits, there are so many options available. If you connect with a financial planner or investment advisor who is passionate about education, they can show you, they can take you on a bunch of speed dates with different companies. I've been on many of those, and it's a hoot. You can find exactly the right mix of service and cost and independence for your specific situation. This person will be a resource, and they'll shop around. They'll do all the legwork for you so that all you have to do is make a decision based on their recommendation. They're familiar with the pros and the cons of different offerings, and it's just a fantastic thing. So one of the things that you do need to think about, though, when you're choosing your education partner is thinking about conflict of interest. So you really want to make sure that your education and advice is not coming from the fund provider. Because, if you are, let's say, investing through Transamerica and your advisor is a Transamerica advisor, they might feel like they need to kind of steer you towards their stuff. So you want a neutral third party whose only job is to make sure that your investments perform and do well. Now, another perk to having this partner is they're going to be able to make sure to steer you right when it comes down to fiduciary risks. A lot of people, they don't really think about this, but even as an LLC with, limited liability, I don't need to worry about anything. What they don't understand is when it comes to retirement plans, you don't have that liability protection. You can be fully liable for retirement plans that don't perform. And you're going to say, but why is it my fault? Well, if you haven't specifically set aside someone else as the fiduciary on your plan, then that means that you are basically saying that you're reviewing the transactions, you're reviewing the investments, you are making sure that these plans are doing everything that they're supposed to do. So you really want to ask specifically and directly if whatever plan you go with provides fiduciary services as part of your advisement package. And that's going to offer you the most protection as a business owner. Now, just like we've been talking about education, and offering a robust education program is going to determine the success of your retirement program. Not just education for yourself, but making sure that your employees understand how to use it and the benefits of using it. It doesn't matter if you have the Cadillac of retirement plans if nobody's investing. So really make sure that whoever you partner with is willing to take the time to meet with your employees. And again, they will do that. These are services that you should expect. And you just really want to make sure that you get the education that you deserve. Now, you've got your, you know how to pay yourself. You've got maybe all your business credit taken care of. You're offering health benefits. You've got a retirement plan. Is it time to grow? Well, Carrie will talk to you a little bit.
Thanks, Casey. And my apologies to you for the flipping of the slides, everyone. I have a very rambunctious large dog who has tried to make her intentions to give her attention known by jumping up and hitting my right elbow on a very regular basis. So I'm trying to get her under control. Let's talk about that growth path that I think I can speak to when I started along my journey as a business advisor. And I know that the traditional thinking was you don't start a business unless you're planning to grow it. But I really, really want to put out the possibility so that you know that we are aware that not every business owner wants to grow their business in terms of going from $1 million to 10 million to 100 million. Yes, that is what many people want to do. But if you are among those that are just trying to ask the question, you know, is this really the right path to me? Or do I want to continue to serve the market I've served? We absolutely understand that. And we can also talk to you about strategies to make that work. And that takes us into a little bit of our marketing arena, where we have some very talented staff that help with the promotion and marketing in the right niche. It's important that we talk about some of the reasons why business owners in general choose not to grow. And there's two primary reasons. In some cases, some are afraid of that loss of control or a change to the culture that comes as we add more people or we expand into new business products or services. And this is a reality that one person cannot do it all. Therefore, we start hiring people, or we end up partnering with new partners to share the weight of this growth. But at the same time, it comes with the potential risk of not knowing what is going on in every aspect of your business. And we have one client who's particularly sensitive to that, as her company has become a lot more stable in the last couple of years. And she sees everybody's very talented, but she really wants better systems to know what is going on. And we've helped to implement some of those systems. Another main reason is lack of planning. And this is kind of interesting because this is more of a default reason why not to grow. And that is the excuse, I don't have time to do that. I have to work with the current urgent issue that's on my plate today. You're very busy with the day-to-day activities, and worse, you may not have a team that you can consult with internally to determine whether or not we can assign some actions and actually start some planning. But that's okay, because with our communities, we've coached companies to address both of these issues with regard to the reasons why not to grow by implementing some solid procedures and developing some new tools to really drive some efficiencies and gain back some time so that there is a little bit of breathing room in making these decisions moving forward. There are a couple indicators when it is time to grow, one way or the other. And they break down into two things that may initially seem like they're counter arguments to each other, but in reality, I hope that you will all relate to this. In one case, it's the sense that everybody is doing everything. We don't have really clear lines of responsibility and authority. We may not have organized with some type of a system-based structure that helps people know who they should consult when trying to decide what or trying to do this. There may be a growing list of action items that we all know we want to do, we need to do, but unfortunately we're unable to do now. We will get to them later when we have time and energy. And of course, many of us start seeing that we're spending a lot of time. This is when we start approaching the 60-hour threshold at the workplace, or in light of the switch to more remote operations in the last year, we may actually now be at 70 hours because it's so easy. After all, we gain 2 hours a day from not having to commute. The other sign that it's time to grow is when one person is doing it all. A lot of times this will be the business owner or the team of owners, and it's very, very typical. The prevailing thought that happens here is we forget as business owners that we started one day and we didn't know anything. We all think that we knew it all the day we started our business. And accordingly, if we haven't had time to plan on how to hire new people or how to train new people, we start to adopt a mentality that takes half as much time for me to do it myself than it does for me to train someone else to do it right. And the challenge here is that we may be overlooking the fact that we are compromising potential for greater revenue, greater stability, happier customers when we're trying to make everybody happy. And in fact, one person can't do all of that. There are some key factors for successful growth. The first is we really encourage that business owners think about what their mission, their vision is, what each of these are, and that we talk about those strategies that are necessary to fulfill both. And they are not the same thing. And we walk our customers through understanding the difference between mission and vision on a regular basis. We really embrace Tom Peters' philosophy of understanding what you're good at and being able to leverage on those strengths as you take on new territories or new markets or new products or new locations. So there's a need to not spread ourselves too thin when we're trying to grow our business. And the best way to avoid that is stick with what you know best, just do it somewhere new. There needs to be a clear delineation of authority, responsibility, and accordingly, who's going to do what, when, and how. And we really work, we love to work. This is actually one of our favorite areas, is to work with defining repeatable and reliable processes that help our customers to achieve the goals that they're after. And we also recognize it's important to bring in new ways of thinking and new ways of doing things along the lines of increasing the diversity and the way of thinking and our perspectives on how would we solve a problem. There must be 10 ways to solve any given problem. And what we want to make sure is that we are considering all those ways, or at least a good amount of those ways, before we just jump on what seems to be the most obvious solution. A really big rule of thumb that we've learned is what may seem like the obvious, most easy solution to any major problem probably is not. Some of the tools that we've identified and we work with our customers on, this is probably nearly a daily activity, is to really get some good tools that will help them to achieve this growth in a more effective means. Of course, we're always talking about time management tools, and there is a plethora of time management tools out there. And we have some success with many, and we have some failures with several. And we love to share our stories of what works and doesn't work along that line. Along with time management, of course, comes with this concept of task tracking. And with some agile background, actually quite an extensive background in agile thinking, we recognize the importance of having really clearly defined tasks with a very definitive state and definition of what means done. And this is where we introduce this thinking that good enough may be good enough because perfection may be too costly. So you'll encounter that trade-off where you've got to decide just how perfect do you want to make a process, when in fact you may not get the return on their investment for that time. We work a lot with customers for goal setting, and we would really encourage that once you have identified your mission and your vision, that you actually identify 2 to 3 very clear goals using the SMART process. We are big believers in SMART: specific, measurable, attainable, realistic, and time-bound. And we really help, we love to help our customers work on these, but our biggest endorsement is please don't take on more than you think you can do. And then of course, diversify your tool use. Don't get caught up in just a single tool. Use more than one sometimes to cross correlate that you're getting the same results, or you're getting data that will support your thinking. You've put this all together now, right? Everyone's been following along. We've given you our 5 major key takeaways. At this point, it's all in your hands, and there is no reason why you can't grow in some direction that's meaningful to you. Reflecting on some of the key points, know your strengths, diversify your thinking, be comfortable delegating. Of course, ensure that people are ready to be delegated, or people are ready to accept delegation. Make sure you have defined processes and work to identify roadblocks and bottlenecks so that you can overcome those. I'm going to turn it back over to Casey, who's going to take us to the end of our presentation.
So first of all, thank you all for joining us. This was a fantastic conversation. I've enjoyed learning a little bit about some of you through the chat feature, and I'm excited to connect with you further. Your feedback is super important. We're going to be sending you a brief survey afterwards through email, and everyone who completes the survey and leaves us an email address so we can get back to you will be entered to win a discount with Archimedes CNC for consultation services. Would like to open it up for question and answers. We'll do it through hand raising first, and also addressing some of the questions that came in through the chat. Somebody had asked, I think Jim had asked us to talk a little bit about the term piercing the corporate veil. And that really ties into what we were talking about earlier with paying yourself. You formed, let's say, an LLC because you wanted that liability protection. And what that means is that your entity, your business, is considered a separate being from yourself. So if your business, ends up going under and owing a bunch of money, they're not going to come and take your house. But if you treat your business as your alter ego, and pay all of your household bills from your business account, and you kind of blur the line between who you are as a person and who your business is, the courts can look at that and say, your business wasn't really a business. It's really you. And that opens you up to all sorts of liability. And that, again, that's why it's so important to understand how to really keep that line and document that line of, hey, I'm not my business. What do they say? I just work here, right? So thank you, Jim, for that fantastic question.
I think, Casey, it's important to mention here also that the courts have been really rigorous in this area with regard to S corps and LLCs. The LLCs seem to have been given a small reprieve, but one of the main reasons why S corps were thrown about in Congress in discussion with the CARES Act is because there has been a propensity for egregious violation of the intent of the S corp rules. And it was a contributor to them almost eliminating S corps from being eligible recipients for PPP dollars.
And Gary, if you want to advance to the next slide, just so people have our email addresses, if we aren't able to get to all of the questions today, and you weren't able to put it in the chat, please feel free to reach out to either of us, and we would be happy to answer your questions specifically.
Casey, there's another comment that I saw in here from Clark. And I reiterate this because he talks about the fact that there are financial consultants who will try to charge you for their consulting services when in fact they are being paid by potentially an investment firm. So yeah, you're absolutely right, Clark, and the fact that there are some that and we like to believe it's just because they don't realize that that's actually something they shouldn't be doing. And obviously, we can talk about how the market might bear there's all sorts of slogans from Latin on what the market will bear, but we are happy to help you find a financial consultant who won't pay you and doesn't expect, of course they want you to invest in their investment firm, but they don't expect you to do that. So that's something that we can put you in contact with. We have a couple resources there that have been excellent to our customers and to us.
Yeah.
Any other questions? gosh darn it, we either put you all to sleep or you were so razzle dazzled that you know it all now.
I'll go with that, the latter.
Well, Dan, do you want to take it from here then?
Yeah, I do. That was absolutely tremendous. You know, we so often we focus on what the business is that we let slip how to run the business. And I think you guys provide tremendous value on that. A couple things, Mr. Anderson, thank you very much for taking my request and joining right away. I really appreciate that. And just to give you a couple ideas on who is where and all this, we got, half of us are from California here. We've got folks from the West Coast, from the mountain region. I think we had a few from Colorado, Midwest, and then the Southeast, in the Mid-Atlantic as well. We've got 2 Marines. That's awesome. 4 Navy folks and 5 Army. No Air Force, and we did have 1 Coastie, but he took off early. Revenue looks like we've got a good amount of startups, but we also have folks who are realizing some revenue, 500 to 1 million and 1 to 5. So that's great stuff. And then this is my favorite part, the certifications you have. We were so focused on being a certifying agency, or at least dealing with certifications in the past. But SDVOSBs on the federal level got 33% of the population. DVBEs, which are state certifications, that's the name of it in California. Your state may vary, another 33%. We got 17% with hub zones, 17% with other. But the really cool thing was that none of you had, 58% of you had no certifications. And that's exactly what we're going for here. Happy to help you with that if you want. By the way, talking about people who are going to charge for your services, don't do that. If you're going to get certified, it's not such an arduous, labor-intensive process that you can do it yourself. Happy to provide you information, but there's plenty of folks who want to charge you for it. Don't take their advice. Take mine and just do it yourself. But the key is, certifications are great and they might help you get a contract or 2 with the state or federal government. But if you can't execute by doing the things that Carrie and Casey are talking about, then you're not going to get a second one, and you're just going to bring a bad name to your business and to the program as a whole. So that is really great and tremendous stuff. And I think there's a few other comments, if not questions, and folks putting information in the chat. So I think that's about it. Looks like everyone's wishing a happy Memorial Day and all that. So Casey and Carrie, again, it's always a pleasure working with you, and yet again, you're showing your real value by coming through with this stuff. So Monty is going to have this available to all the folks who have registered for it, and we'll send that out. I believe we'll send a link out to those folks who registered. And I think we are all set. Monty, am I missing anything else?
No, you are not. I think we're in great shape.
All right. Thank you so much, everyone.
You bet. Carrie, Casey, am I missing anything else from your side?
I don't think so. We'll be in touch with a survey to everyone. And again, just want to stress again that we really would appreciate your feedback, and we will throw in a discount to a lucky winner.
Absolutely. Well, thank you very much for showing up, everyone. I don't want to take up much more of your time. I know you have all important things to do. So we will let you go, and join us next month as well. Take care.
Happy Memorial Day, and thanks to all for your service. See you.
Absolutely. Thank you. I was remiss in saying that.